The US dollar, a symbol of economic power and stability. It's the bedrock of the global financial system, the cornerstone upon which global trade and finance are built. The currency that everyone relies on, from small businesses to large corporations and everyday people. But lately there's a growing unease. People are worried, and for good reason. They see prices rising faster than their paychecks, making it harder to make ends meet. They hear whispers of inflation and recession, words that send shivers down their spines, and they can't shake off the feeling that something isn't right, that their financial security is slipping away. This unease is about more than just numbers on a screen. It's about the real impact on people's lives. It's about the value of our hard-earned money, the savings we've built up over years. The ability to afford the things we need, from groceries to healthcare, is at stake. And the promise of a secure future for ourselves and our children feels uncertain. The US dollar, once a symbol of stability, now faces a critical juncture. The world is watching closely. What happens to the dollar affects everyone, from local economies to international markets, and right now the stakes couldn't be higher. The potential for economic upheaval is real. This isn't just an economic issue, it's a human one. It's about our livelihoods, our dreams, our aspirations. Our very way of life hangs in the balance as we navigate this uncertain financial landscape. At the heart of this storm sits the Federal Reserve, or the Fed for short. Think of them as the conductors of the U.S. economy, wielding the powerful baton of interest rates. Their recent meetings have been nail-biters, filled with tense discussions and tough decisions. The enemy they're battling? Inflation, that insidious beast that eats away at our purchasing power. The Fed's weapon of choice? Interest rate hikes. By making it more expensive to borrow money, they hope to cool down the economy and tame inflation. But it's a delicate dance. Raise rates too high, and you risk plunging the economy into a recession. Don't raise them enough, and inflation continues to rage. The Fed is walking a tightrope, and the world is holding its breath. To understand the present, we need to rewind the clock. Remember those too-good-to-be-true interest rates of the past decade, the flood of cheap money that fueled a borrowing and spending spree? Those days of easy money weren't without consequences. Like a sugar rush, they felt good at the time, but the inevitable crash was always looming. Artificially low interest rates encouraged excessive borrowing, inflating asset bubbles. Stimulus checks, while well-intentioned, injected trillions into the economy, further fueling inflation. Now we're grappling with the hangover. Inflation is soaring, and the Fed is playing catch-up. The chickens of easy money have come home to roost. Looming over this economic drama is a colossal shadow, the national debt. It's a staggering sum, a testament to years of overspending and unchecked borrowing. And it's a problem that's only getting worse. Every year, the U.S. government spends more than it takes in, adding to the debt pile. This borrowing spree has consequences. It fuels inflation, devalues the dollar, and weakens the economy. The debt burden is like a heavy weight dragging us down, making it harder to address the challenges we face. This isn't just an abstract economic concept, it affects us all. A weaker dollar means higher prices for everyday goods and services. It erodes our savings and diminishes our purchasing power. The debt crisis is a clear and present danger to our economic well-being. The allure of tangible value, gold, and real estate has captivated people for centuries, and the flight to safety. In times of uncertainty, people seek safe havens. When the stock market becomes volatile and the future seems unpredictable, the desire for stability grows stronger. And in the face of a weakening dollar and a wobbly economy, many are turning to tangible assets, things you can hold in your hand, things with intrinsic value. These assets provide a sense of security that paper money and digital currencies often cannot. Gold, the ultimate safe haven asset, has always held a certain allure. Its luster and rarity make it a timeless investment. Its value is enduring, transcending the whims of governments and central banks. Throughout history, gold has been a symbol of wealth and power, and as the dollar falters, gold shines even brighter. Investors flock to it, seeking refuge from economic instability. Real estate, too, offers a sense of security. Owning property provides not just a place to live, but a tangible asset that can appreciate over time. Land is finite, and a roof over your head is essential. The value of real estate often increases, making it a reliable investment. Investing in real estate can provide a hedge against inflation and a source of passive income. Rental properties, in particular, can generate steady cash flow. These assets represent more than just investments. They represent stability, security, and a hedge against uncertainty. In a world where digital assets and currencies dominate, tangible investments offer peace of mind. They are tangible reminders of value in an increasingly intangible world. Gold and real estate stand as pillars of financial security, offering a sense of permanence and reliability. A shifting global landscape, the dollar's waning dominance. The U.S. dollar's dominance is not a law of nature, it's a result of history, economics, and geopolitics. And just as the world is constantly changing, so too is the global financial order. The dollar's grip on the world stage is loosening. Other currencies like the euro and the Chinese yuan are vying for a larger share of the pie. Countries are increasingly conducting trade in their own currencies, bypassing the dollar. And then there's the rise of digital currencies, adding another layer of complexity to the global monetary system. The dollar's decline is not necessarily a bad thing, it's a natural evolution of the global economy. But it does create uncertainty and challenges. The world is entering uncharted territory and the rules of the game are being rewritten. Recession rhetoric deciphering the political discourse. The R-word recession is being bandied about with increasing frequency. Politicians are engaged in a war of words, each side spinning the narrative to their advantage. It's enough to make your head spin. The current administration assures us that the economy is strong, that any talk of recession is overblown. The opposition paints a picture of impending doom, blaming the current administration for the economic woes. Who to believe? The truth, as always, lies somewhere in the middle. The economy is a complex beast, influenced by a multitude of factors. Trying to predict its future with certainty is a fool's errand. Safeguarding your financial future, practical steps for uncertain times. So, what's an average person to do in the face of such uncertainty? The good news is that you don't need to be a Wall Street wizard to protect your financial well-being. There are practical steps you can take to weather the storm. First and foremost, live within your means. Create a budget, track your spending, and avoid unnecessary debt. It's an old-fashioned concept, but it's never been more relevant. Next, build an emergency fund. Having 3 to 6 months' worth of living expenses in a readily accessible account can provide a crucial cushion in case of job loss or unexpected expenses. The golden rule of investing. Diversification is key. Don't put all your eggs in one basket. Diversifying your investments is crucial to mitigating risk. Investing in a mix of stocks, bonds, real estate, precious metals, and other assets can help safeguard your portfolio against market volatility. Consider adding some gold to your portfolio. It's a time-tested hedge against inflation and economic uncertainty. You can buy physical gold, invest in gold ETFs, or even consider gold mining stocks. Real estate, while less liquid than other assets, can provide a stable source of income and appreciation potential. Whether it's investing in rental properties or simply owning your own home, real estate can be a valuable part of your long-term financial plan. Knowledge is power, staying informed in a volatile market. In volatile times, knowledge is your best defense. Stay informed about economic developments, market trends, and geopolitical events. Read reputable financial news sources, follow economic blogs, and listen to podcasts. Don't be afraid to seek professional advice. A financial advisor can help you create a personalized financial plan, assess your risk tolerance, and guide you through investment decisions. Remember, knowledge is power. The more you understand about the forces shaping the economy, the better equipped you'll be to navigate the challenges ahead. Charting your course. Navigating the economic waters ahead. We live in uncertain times where the economic landscape is constantly shifting beneath our feet. The U.S. dollar, once a symbol of unwavering strength and stability, now faces unprecedented challenges and uncertainties. Inflation is eroding our purchasing power, making everyday essentials more expensive and stretching household budgets thin. The national debt continues to balloon, raising concerns about the long-term economic health and stability of our nation. and the global financial order is in flux, with international markets reacting to geopolitical tensions and economic policies. But amidst the uncertainty, there is also opportunity for those who are prepared and vigilant. By understanding the forces at play, making informed decisions, and taking proactive steps, we can not only weather the storm but also emerge stronger on the other side. This requires a strategic approach to managing our finances. This is not a time for panic. It's a time for prudence, careful planning, and thoughtful action. It's a time to take control of our financial destinies and chart a course towards a more secure future, ensuring that we are prepared for whatever comes our way. The path ahead may be uncertain, but by staying informed, diversifying our investments, and living within our means, we can navigate the economic waters ahead with confidence and resilience. Together, we can build a foundation for a brighter financial future.